Hi friends, good evening to all. We have a session which I know there is a time constraint, and I myself have a time constraint because I have to catch a flight at 11. So I have to complete the session by 8 o'clock, so half an hour time, not more than that. Friends, we'll have only half an hour time for us. Okay, so yeah, I'm making it digitized. So the topic is quite interesting. We could have had a very long chat on this, but unfortunately, because of the time constraint, as I said, we'll limit ourselves to some pertinent things. Digitization, we know that if you see the microfinance sector, it is a high-touch activity, highly physical activity. And when it started maybe way back about 25 years back, it was entirely a physical activity. Lots of papers were collected. Lots of things were done on the paper. But things have changed over a period of time. And we have seen over a period of time how gradually things have become more digitized. In fact, probably in 2015 when the credit bureau check came, probably that was the first time, apart from computerizing the accounting system or some of the loan management activities, that was the first kind of a digital activity which was taken by the microfinance sector. Subsequently, when a couple of challenges which came to the sector, like demon for that fact, which changed entire disbursement to a digitized mode. Then when COVID came, of course, people started thinking of digitized collections also. In the meanwhile, a lot of digital advancement happened, and in the process, the loan process has started become digitized, collection and sourcing has become digitized, and disbursement have become digitized, and collections have also become digitized. So now we find a lot of digitization, a lot of computerization happening in this sector. So this being the scenario, and the topic is that, our topic is that what is the opportunities, challenges, and the way forward for this digitization in microfinance sector. So I would like to discuss with this with our panelists who are from a diverse field. We have Shivakumar, who is from IIFL Samasta. We have Sudesh from Grameen, which is the biggest microfinance institution. We have Martin from Ujjivan Small Finance Bank. It's a small finance bank. We have Sreekrishnan from Kyndryl India, which is a technology provider. So all different kind of aspects we can get. So to start with, I will request all of you to give in 2 minutes, what is the kind of digitization your company has achieved? And maybe a bit of history to that within 2 minutes. I think we'll start with Shivakumar. Shivaprakash, sorry.
Thank you. As an organization, we've always had a policy of a paperless organization, had a vision of a paperless organization. So if you're looking at when we started our paperless journey, it was, we looked at it in 2 ways. One was from a customer perspective, and secondly from an organization perspective where we could improve internal efficiencies. From a customer perspective, we started the journey from 2017. That's when we introduced our mobile app. Since then, we've digitized loan applications, capturing of KYC documents, digitizing our CGT, GIT process, and even the loan documents. In fact, we've also eliminated paper receipts. In the last year, we've also introduced e-sign. So from a customer touchpoint perspective, we have automated the entire process. And we also have a customer app, we call it Saki. Our customer can actually view the e-sign documents. They can view the prepayment history, and they can also make payments using a mobile app. Okay, that's from a customer touchpoint perspective. From an organizational efficiency perspective, we have automated, we have digitized route maps. We have our own app which guides our field officers to the centers. Even if someone is new, they don't have to rely on paper-based center maps. Secondly, we've also digitized all our physical registers in the branches. Which means that, we have a lot of applications which capture all the information that we need. For example, We used to have attendance register, visitors registers, staff movement registers. All these registers have been digitized now. Okay, so these are some of the things. Plus, we also, when we think of digitization, we think of paper-based processes being digitized. But we also have a lot of information floating in emails. For example, any exception approvals or even your minutes of the meeting. All these things are floating in the mails, but it's not stored anywhere. So we've also have developed a lot of applications which can improve our internal efficiencies, and that's where we are as of now. But this is a continuous process. What we used to think of digitization 10 years ago is much different from what we would be doing going forward. So it's a continuous journey, and I'm sure the future is exciting.
So from the customer point of view, you said almost everything, entire thing has been. How much is physical now?
There's no paper. I mean, of course, we had to be at the field for CGT, GIT, but there's no paper-based process. In fact, we are also going to introduce eKYC month's time, which means that it will further strengthen our customer processes.
Sudesh, you are the largest microfinance company in the country.
Right.
So what is the kind of digital advancement, more than what our Shivaprakash did?
So basically, since we are one of the largest microfinance players, the biggest driver for digitization is scale. Because the number of loan applications we almost process 80 to 90,000 applications a day. So digitization, as he rightly said, is a overall, it's a process. It's a journey towards trying to automate and build in efficiencies. And amongst all MFIs, we are probably the mobile first technology. Most of the MFIs have adopted mobile first technologies. We almost have got 15 to 16,000 Samsung tabs given to our field officers who process loan applications digitally, who does collections digitally. And it is an overall process. Like for instance, to give an example, the first step towards digitization is just scanning the documents and uploading as an image. And then it moves on creating workflows, wherein the loan application can be digitally entered by the person on the field. It goes for underwriting, collections. Then you introduce workflow systems. And then from there on, you implement rule engines, you implement RPA, robotic process automations, to basically automate processes, but thereby improving productivity, reducing human errors. So, and then over a period of time, you work with various fintechs to try to see how you can improve the turnaround time, how you can fill in data proactively and improve the experience. So whole digitization is a process. And as new technologies come in place, it's all about adopting new such technologies and demonstrating value to the business. So it could be in terms of customer onboarding, loan applications processing, computing the eligibility of a customer, taking credit decisions, collections. I think digitization has basically sort of penetrated all aspects of the processes.
We know that fintechs are also in the field.
Yes.
So how much, what would be the difference of an MFI and a fintech if entire your process is becoming digitized?
So as what we previously said, the biggest advantage as an MFI is that the customer touch, basically the habit of connecting with the customers, basically helps us to foster trust within the customers. And that is the core DNA of most of the MFIs sitting in this room. So this basically helps us understand the needs of the customer, identifies and helps to identify the right loan product based on his repayment capabilities, so that he's able to fulfill his aspirations. And that is what all of our MFIs in this room add value, unlike the fintechs who typically you might not even see the customer.
Okay.
So and there's a huge opportunities for us to basically probably collaborate with fintechs, come out with better solutions, better products. But I think that is the key strength that we all of us have in terms of making sure that we in terms of understanding the customer better. And for us to basically scale our business, I think most of our MFIs are doing, we are investing heavily on technology, building a good, robust IT infrastructure, working with various fintech solutions to basically automate business process. I think that becomes a very critical foundation for us to interconnect when, when we probably have to come out with new co-lending products with the various players in the market that will really enable us to come to speed.
Thank you. Martin, you are a bank. You are a small finance bank and you are the largest small finance bank in the country. I'm sure your microfinance background is still continuing. So what is the difference you have brought in as a bank in the microfinance activities?
Yeah, so one is being in Bangalore, technology capital of the country, you can't be away from digitization, right? And with our past experience in microfinance, we have tried to improve it or become stronger by becoming a bank, right? So one is how do we ensure that whatever we deliver, it enhances the customer experience. We have deeply studied different stages of the customer life cycle, okay? I think my colleagues here spoke about the acquisition part of it and the processing part of it. What we have uniquely developed is we have created a first of a type of app, which is visual, voice, and vernacular, right? So this digitization has to provide power to the customer, right? The power has to be with the customer. It has to be convenient to the customer. Today, if you're saying the customer behavior has changed over the number of years, right? Whether it is in terms of your OTT platforms, if you're saying that most of the advertisements and everything which comes in your OTT and everything, it's in regional language. So you can't escape. Whatever you're going to digitize, it has to be in your regional language, which has to be easily understood by our customer. So as a bank, what you have done is, yes, in terms of your acquisition, whatever automation we could do, it is nearly paperless actually, and it is almost instantaneous we are able to process, right? In terms of experience, what we have done is for an existing customer, we have taken away the pain point of them visiting our branch for fulfilling their services, right? So we have provided the mobile-based app, which enables them to avail services, right? So that they don't have to take time off from their workplace to fulfill their requirements. So as a bank, we have tried to give the power to them so that they don't have to visit. And another thing what we have done is, I think during the earlier panel discussion was, how have you helped the customer in terms of removing cash? Yes, we have closely observed the customer environment where they work in, and we have come out with solutions. So for example, if you are going to disburse loan into their bank account, if their transactions are going to be in cash, how do we able to help them convert that cash into digital currency? So we have given them unique QR codes, which enables them to accept repayments digitally and also transact with us digitally. That achieves 2 points. One is it eliminates the risk for the customer. Second one, it reduces the cost of your transaction for the customer. So these are the few things which we have done as a bank.
Now, again, my question is that, again, my doubt is that, see, you are saying that as a customer experience, you have made so much, provisions and facilities which avoid even the, borrowers need not have to come to the branch at all. So are we moving towards a fintech kind of a scenario?
See, what happens is fintechs, so it is two different aspects actually. Fintechs provide you the technology, what is required at a very shorter duration of time, and they can help you jumpstart actually certain processes, right? But they cannot give you the end-to-end processes. Whereas as a bank, what happens is your financial services and your outreach, that will continue. I think the model which was there, it is definitely undergoing to go a change, right? So the model what was there 10 years ago, where you have to meet the customer frequently, interact with them, collect the cash, I think that portion will get transformed to a larger extent. Today, for example, if you're seeing, a lot of us, we meet over Google, a lot of us, we meet over Zoom. Something like that definitely is going to happen there also, so that your personal connect doesn't go away, but at the same time, you don't have to travel distances to keep the touch with customer.
Right, thank you. So, let's hear from our technology provider. You heard various technologies being adopted by the MFIs and SFBs. What is that the next kind of a technology as you are likely to provide to make their life more comfortable, or make the life of the customers more comfortable, other than what we have heard from these people?
See, I was thinking of, so we are a technology services provider, and our bread and butter is in innovation, right? Technology innovation. So market shifts can rattle the most prominent of enterprises, and nobody is safe. And unless you innovate, regardless of the industry, you will shut down, right? So that holds for every industry. Now, while we were speaking, I was thinking of an example of a technology innovation that is relevant to this industry, the micro lending, the small finance, and so on and so forth. And that innovation is ongoing in India, today. So the question is, if you can use technology innovation to accelerate lending action in the Indian economy, if you can remove friction from the process, right? If you can create something equivalent to UPI on the lending side, that is something that would accelerate financial inclusion. So the kind of loans that we are talking about here is obviously loans like agri lending and dairy lending and livestock lending and loans against KCC and so on and so forth. Now the reason why there is friction in this space obviously is because the lending entities do not have access to variables that they need to model risk and underwrite this loan. So for an example, if a lending entity want to give a loan to a small-time farmer, what are the variables that would be needed to model risk? And the answer would be for a given parcel of land that the borrowing farmer has, what would be the crop type, what would be the crop yield, what would be the, was there an incident of flood, what is the irrigation state, what is the soil health, so all of this would be variables that are needed to model risk. Now the issue is that the lending entities do not have easy access to this kind of variables or to providers of these variables, because the providers of these variables are non-uniform, non-standard. One example of a provider is the state government with their digitized land record system, but each state government land record system looks different API schemas, different data schemas, and so on and so forth. Then there are many providers of satellite data who can use ML to automatically figure out the crop yield and crop type and so on and so forth. Similarly, providers of e-sign and e-stamping and consents and so forth. So now the question is, how can you make the least tech savvy of lenders be able to create the most sophisticated of risk models, right? And then underwrite these loans. So the Reserve Bank of India, they have envisioned a credit stack, what they call as credit stack, that would do all the heavy lifting and make the lender's journey as lightweight as possible. And this was recently announced by the Reserve Bank governor in his bi-monthly address, a week or so ago. So this is an example of the kind of technology innovation that can democratize the lending. See, now only the most tech savvy and the big pockets, the big banks could create these models to calculate the risk, model delinquency, and make the loan disbursal and interest a function of this. Now, if this is democratized, and if the least tech savvy of banks and the smallest of the lending entities can leverage and create this risk models, this can change the game. This can level the playing field, and this is an ongoing example of how technology innovation can level this playing field.
So what I understand is that you are saying that there can be a kind of a UPA kind of a environment created in the lending scenario. Does it help in somebody who needs emergency loan, maybe a medical requirement or any kind of an emergency loan? Can he run to a MFI and borrow instantly with having this kind of information with them?
So, ideally, utopially, yes. The answer is yes, because the lending should become so easy, the risk modeling should become so easy that it is an API call to this platform. So, instead of dealing with 10 different providers and creating a model yourself, can all that be offloaded? So, recently HDFC, for example, released a new lending journey around milk cattle lending. So, there the providers are those who have data about milk yields. So there, they have already piloted this platform. So these milk yield providers have onboarded this platform. So all it takes for SDFC is one API call and create their model. So you can generalize this to several.
Are you doing something on that? Are you a company?
Yes, we are.
Oh, great. Achha, Sreeprakash, one question I have is about, we have in the previous discussion also we heard that there has been a dilution as far as the group lending is concerned, group approach is concerned, the group dynamics is concerned. Can the technology play any role in maybe some kind of a virtual kind of a meeting can we create?
I mean, I have listened to the discussion on this earlier. One thing is there are a lot of things that's happening on the AI front. For example, we have generative AI, which can generate a lot of curated content, which can be used to engage the customers. I mean, of course, all these. There's not much of language support, local language support as of now, but in future, definitely all these technology can be put into use for engaging the customers in a much better way, very customized content for the customer based on the data that we have about them. So, dilution of, importance of group meetings, certainly it is coming down. I'm sure 5 years from now, definitely what we would see is different, but certainly there will be technology. I'm not talking about a virtual meeting. I don't see a point in doing a virtual meeting, but there could be a lot of other ways we could engage the customers.
Okay. Sreekrishnan, do you see any kind of technology solution for that?
For what? Can you repeat?
See, now the group, the MFIs lent in a group approach. They have a center meeting, group meeting. In the center meeting, the appraisal takes place, the loan is given. Any technology can, because now suddenly after the COVID, you find that suddenly there is a lack of interest as far as attending the group meetings are concerned, suddenly you find that things are becoming a little more diluted. I think, Martin, you would like to say something on that?
Yeah, absolutely. So, for example, today RBI allows us to do video KYC, so which means that the customer doesn't have to visit my branch for doing their KYC activity. So, similarly, you can avail services on the video banking. Okay. All the customer has to do is they have to use my app, invoke the video banking, and they can avail the services. It serves two. They don't have to visit my branch. The authentication has happened because the customer is logging through their phone. It is very much possible. And the
still
same
connected is there? Still we can keep the connect? Maybe
absolutely, absolutely. And you're giving the convenience to the customer. Today what happens is in your physical infrastructure, you have a limitation of your working hours and everything. For example, let us assume the customer is free only after 8 in the evening, or the customer is free only on a weekday at a particular time. So this video banking kind of facility is very much usable and it is being used.
Sudesh, anything from your side, any thoughts on that?
Hello, yeah. See, I think it's a very interesting journey that we are all getting into.
Yeah.
Right. One is basically the technology advancements that we are currently seeing, and fintech implementing point solutions, MLAI coming into play. But what is also happening parallelly, if you look at, is the regulators are enabling data to people who are interested in. I don't know, like what she just mentioned, enabling micro data, so that, and data is going to be the next oil for growth. And with technology and data making it accessible to companies like us, we'll be able to devise new solutions. So, like for instance, if you remember 2 days ago when there was this fintech festival, the chairman of SEBI, she actually said, I've got a lot of data and all of this data is going to be made available to all of you.
Right.
And whoever is able to make best sense of data using analytics, for credit decisioning, collections, and using technology together, I think they will be the key winner into this whole thing. And the good thing about us is that we have grown from the bottom, in the sense that our business has grown because of our connect with our customers. So our DNA is basically understanding customers' need. I think we are in a best sweet spot of not only having a best connect with the customers, but also adopting technology and data. I think we will be able to position ourselves offering the best products. We don't need to worry about any fintech or any startup.
See, in that manner. One dichotomy we find in microfinance lending is that at one side we say that we are serving the poorest to the poor section, but as the previous panel also discussed, we are still not touched the bottommost people. That is the poorest of the poor or the ultra poor. That is number one. Number two is that we are still concentrated in around 200 to 300 districts. If you see the data, around 70% of your portfolio is in 200 districts. So that means another 300, 400 districts which are having very, very minimal, maybe some of them cannot be approached in the normal way of our regular microfinance lending. Can technology provide any kind of solution to this?
So I'll try. So let me give you an example. Yeah. See, we know that the Indian economy depends on UPI payments, and that touches not just the poor but also the poorest of the poor. Just this month, the number of transactions has crossed 10 billion. Yeah. See, there are about 480 UPI-enabled banks today in India, and for any UPI payment, there is an interchange called NPCI. That's how UPI works. Yes. So what the interchange does is it reduces the complexity by a factor of n, because if there's no interchange, if there are n banks, there are n squared flows. If there is an interchange, there is only n flows. Now the issue is that this is not a scalable model. There is a single point of failure. So see, in the last 1,000 days, the number of UPI transactions increased from 1 billion a month to 10 billion a month. Yeah. So NPCI data center also had to increase in that proportion. NPCI is a customer of Kyndryl as well. Now, in the next 1,000 days, if the number of UPI transactions increase from say 10 billion to 100 billion, within the realms of possibility, how much can you go in terms of increasing the size of your data centers? Plus, consider the single point of failure. If the interchange goes down, it will impact the Indian economy, and it's going to disproportionately affect the poorest of the poor.
Now, are you saying that there should be some organization like an NPCI which should be holding the data of all these people? Is it that?
No. What I'm saying is that, so in the current, this is the current model. Now imagine technology, exponential technologies like a blockchain, Web3, cloud, AI, a combination of confluence of all of this. Now in the new world, and NPCI has already issued an expression of interest around this area. In the new world, each of these UPI-enabled banks will form a consortium. They will be part of a blockchain network. They will be peer nodes in a blockchain network. So each time you do a UPI transaction, it will be a transaction modeled in the blockchain network. It won't go through an interchange. So it becomes, scalable. Now, along with this, you do get problems in terms of design points, because this becomes now a distributed system. And a distributed system, you can't have 100% availability and 100% consistency at the same time. In WhatsApp messages, right? It's also a distributed system. And they choose availability over consistency, which is why you sometimes see out-of-order messages on WhatsApp. But here you have something called eventual consistency, which is before the clearance and settlement, things get consistent. Maybe another example that we can all easily understand is the FASTags, right? FASTags, as of last month, 300 million FASTag transactions all over India. Toll booths all over India, that's probably the biggest edge network in the world, because each toll booth is compute and connectivity. Now today, when a car passes through a toll booth, it is the FASTag transaction, it queues up in a message queue waiting for one big server. Now again, if this becomes distributed with technology, Web3 and so on, now if the server goes down, transport gets impacted, the supply chain gets impacted, the poor gets impacted, the poorest of the poor also gets impacted, right? So these new technologies are very, very relevant, and there is a direct linkage between these exponential technologies and financial inclusion, bottom of the pyramid, and so on and so forth. So these were a couple of examples.
Sudesh, any thoughts?
I think what you said is basically as technology advances, and it is very important to basically build resilience in a way that it doesn't impact the end customer. So that's why as a bank we have the various DR policies, BCB policies, at least within the bank, right? And I think that's how even the corporations are also building towards that.
I think the video...
the video KYC.
Video KYC or video banking, which Martin you told, can this be applied for a remote area?
Yes. Very much it can be applied for a
I think probably that could be a way forward for reaching the large number of districts which are totally cut off now, whether it is a hilly district, whether it is a remote district. Probably technology should play a role to connect them, at least virtually, and bring them together.
Anywhere in the country. You can serve anybody anywhere in the country.
Great.
So that is the power.
We have time for just two questions. Can anybody, would you like to, anybody? One. Yeah, please.
Anyhow, for your advantage, my name is Emperor Gunishek Kannada. I am external judge and external justice of High Court of Karnataka. and also elevated to Supreme Court of India's ex-1 Chief Justice. So the straightforward question is, what is the support that microfinance is getting from the macrofinance? Can you just elaborate on straight away, like the
Actually,
support from microfinance?
We are discussing something on a digitization of microfinance.
Okay.
So it is slightly out of the area which we are discussing on. Yeah, come.
My name is Rajesh G. We have our own academy,
Yeah.
Futuristic Life Blueprint Training Academy, where we know that regarding Krishna told and Mr. Ujjivan head, he was Martin's. Actually, we need digitalization for each and every corner of India. For that, like technology like blockchain technology, whatever Krishna has told, and futuristic things, what artificial intelligence, machine learning, these things. And at the same time, we are connecting to across world by latest technology like Google Meet, Zoom Meet and all. So we can connect across the India, each and every corner of people. Like O-Connect, a new technology is coming. Like that, we have a lot of updations in the technology wise. So we can make use of all the institutes to connect to this particular technology. In the sense, we can reach a maximum number of people and they can do like video banking, whatever you told. It's a good thing. So we should update, or else we will go into outdate.
You don't have a question, it's basically a statement you are
nice.
making. Anybody else?
Thank
Yeah. One last, yeah, from quickly.
I have one quick question. This
Yes,
is
sir.
Vinish
Yes, sir.
from Craft Silicon. See, in the previous panel also we talked about the common infrastructure, and now connecting to, because there are a lot of evolution that has happened around the globe in some of the other countries where the technology company and the associations and the industry leaders, they came together and created a common platform to boost up the lower segment of the lenders, like let's say the small and medium MFIs. So over a period of time, do you see something like this happening in India, wherein we have the common platforms, wherein the standard framework is deployed, and the MFI companies are connecting to it rather than just going about sourcing their individual applications and individual technology platform?
So you're saying that you're asking whether we are seeing, whether we'll see such kind of a scenario. That's what
Such kind of a scenario, because that will
What do you
boost
think?
the lower segment. I mean, see, we are seeing
A shared platform, that's what
yeah.
he's talking about. Will there be a possibility for a shared infra platform in technology?
Yeah, I think something which is just started off is this Open platform, where it is like a marketplace where anybody who wants to take a loan, the banks can participate there, and yeah, it is very democratic. So it is in the early stages. I'm sure something similar will emerge in the MFI segment also.
Okay. Anybody else? Okay, last question, somebody raised that. That's the last question. Yeah.
So good evening, sir. My name is Vishnu. I represent L&T Finance. So my question is on the similar line of what Martin sir was explaining, video KYC. So one thing that is inevitable in microfinance customer onboarding journey is that CGT and GRT, where a person from the bank will go and do the appraisal, house visit and all that. But if you see on the flip side, products like housing loan, MSC, they are doing video PD for ticket size like 1 crore and above. But we are lending 1 lakh rupees, but still we are not exploring on video PD option, tele PD option. Can you throw some light on that?
I think Ujjivan, you said you are doing something on that, isn't it?
Yeah, we have already started the video KYC and the video banking. Okay, so for example, for a repeat customer or the customer who is already your existing microfinance customer, the repeat loan, they don't have to go through that entire procedure. And similarly, if they are already having a credit history, there are ways where the customer doesn't have to go through that lengthy process, because today you have the data, your bureau is very strong, right? So based on all these things, these journeys can be very much simplified, and we are on that path actually.
So now the last one minute to each of you. You can give your thoughts about how the future looks like. Maybe the next 5 years. How does it look like based on the technological the advancement which we are seeing now? AI, ML, all kind of new technologies are in the field. So how do you see the next 5 years in microfinance sector? Start with Sudesh. Shivaprakash.
5 years is a long time in
Okay,
technology.
make it 3 years.
Okay. No, what I mean is, see, I mean, there will be a lot of changes. Even 3 years from now, there will be a lot of changes. But what won't change is the huge demand for credit. Okay, I mean, if you look at 5 years ago, where we were, I mean, we didn't have internet. I mean, since rural pockets didn't have digital penetration, we didn't have. We were doing disbursements in cash. Digital collection wasn't there. Now, in fact, many of our customers didn't have smartphones also.
So you're
But
saying that there will be a huge demand coming up in the next 5 years. That's what you're saying.
that's right. See, even from a technology perspective, wherever we are now, I mean, there'll be use of a lot of data. Probably, I mean, as we discussed, there won't be a
Your data becomes the king.
sorry?
Data will become the king.
Data will become the king.
Sudesh, what is you?
So my take is simple. I mean, if as we just talked about in the previous panel, if India will be a developed country in next 15 years, the development will come in rural because urban cities have grown to a bigger extent, and hence there will be a huge growth in the rural markets. And hence, from a technology perspective, adoption of new technology, it's not about, I mean, technology is already there, like video PD, video KYC, ML, AI. It's all about adoption, right? Adoption in the field, adoption.
So more of adoption you are seeing.
Absolutely.
New
So the
technology.
adoption, and the adoption will be forced by the ecosystem by itself, right? Because
Demand and the requirement.
So smartphone is increasing.
Right.
The customers are really well versed doing UPI transactions, e-commerce. So that will push all of us to basically make our journeys more seamless, make it more intuitive. You know, technology like metaverse, because metaverse is again a very good technology which will help in training our customers, training our members, training our own employees.
Okay.
So a huge leap of technology will, along with the data,
Right.
will basically make life simple and easy for the growth of the credit
Right.
in rural area.
Martin, what is that your take on?
Yeah, so I think in the world, India's payment infrastructure is one of the most advanced, I would say. I think we should feel proud about it. Right, so RBI is contemplating, I think it is already started off, the digital currency which is started off.
Yes.
I'm sure that is going to make a leap and bounds jump, especially in the credit area. For example, if it's a new, even the person does not have a credit history, it's very much possible to give loans without having a bureau information, because your digital currency will, I'm sure it will help in leap bounding in that. And cloud would be another area, I think, which we cannot ignore. Right, going forward with the volume of transaction which is happening.
Okay, when you show
and
the shared infrastructure cloud.
Yeah, so there was a panel discussion earlier on the cost. I think if the cost has to come down, the technology like cloud, which is inevitable, and I think we'll have to adopt towards that in case we have to provide a
last word from you,
service.
Sreekrishnan.
See, India is special because of the unique nature of problem solving you need here. So we have challenging design points here, daunting engineering constraints, different kind of price points and so on. So now global companies know that if they succeed in India, they can succeed elsewhere. So any big companies you see, they have 2 research centers, one will be in the US, the other will be in India. And if they have only one, it's probably going to be only in India. So for example, for any app on your mobile, the number of simultaneous users is in the low millions, right? Single digit millions or double digit millions, and the fluctuation of load. COVID, for example, the fluctuation of load is 2,000 during off-peak, or used to be 2,000 during off-peak hours and 20,000 during on-peak hours. So it's like 10,000x of fluctuation, right, for which you necessarily need the cloud. So it's like if you can drive in India, you can drive anywhere else. Similarly, you solve a problem in India, you can solve it for the world. So that's what.
So if you solve the problem for India, you can solve it for the world. So with that, I think we'll stop here. Friends, it was a wonderful discussion we had, but unfortunately the time was a constraint. We could not go further beyond this. With this, I stop here. The only takeaway from this discussion is that technology is going to make a change for the next 5 years. And their thing is going to be on the technology, and technology will determine how do we reach the poorest of the poor, or the farthest of the farther, or the remotest of the remotest, and also provide them the best possible customer experience. Thank you.
Mr. Shivaprakash Deviah, Director and CTO. This is Mr. Sudesh Puthran, CTO, CreditAccess Grameen Limited. This is Martin Pampilly, COO, Ujjivan Small Finance Bank. A round of applause, yes, for the panel members and the moderator.